Why doesn't somebody tell me what they think is going on here?
Brent Johnson, welcome back. Here we are, another edition of the Milkshakes Markets Madness show. I said another edition because they're no longer episodes. We're just constantly, it feels like, in front of the microphone and in front of the camera, which we're loving. We're having a blast. We're enjoying all of it. And right now we're recording on a Wednesday for the what we would call our midweek update. And at the end of the week, for the weekend, for the full episode, we covered a whole bunch of things that were going on. And then we did our Monday peek at the week. And at that point, you had mentioned you were very excited for the week ahead. We have a bunch of stuff happening at the end of the week, specifically CPI, inflation data, and consumer confidence. Unfortunately, it's it couldn't have happened today, Wednesday. It would have given us something to talk about, but it felt like so far a pretty slow week. Would you agree?
Yeah, it's been a little bit slow, but it's been kind of a slow burn to a potential exciting, result because, one of the things I said at the end of the show last week is I was looking forward to Monday. And part of the reason I was looking forward to Monday is I knew that this week, we would have CPI and that is going to be a market moving number, whether it sends the market higher or lower, I don't know. But what I do know is that a number of different equities and equity indices are sitting kind of right on their support channel. And I tweeted out on Friday, a number of different charts showing the weekly charts showing all these different indices kind of sitting right on the support line. I showed Apple, Nvidia, S&P, DAX, Nikkei. I think I put the Dow on there. And, the markets have traded off a little bit over Monday, Tuesday. Not significantly, but they're down a little bit. And so now all of those charts are now kind of below those support lines on the weekly. So if we get a hot CPI number tomorrow, I would expect, equities to sell off and those charts to kind of be broken. But if we get a soft number and equities rally, then, they're kind of saved by the support line and perhaps we move on to higher highs. But regardless, tomorrow is going to be a pretty interesting day. Whether things go up or down, yet to be seen.
Yeah. And you did share this week another interesting chart, one that you actually took action on, which was silver. So I want you to share a little bit more about what you were thinking. But do you find in these slower weeks when you're kind of all hands are on deck for a particular set of data that maybe doesn't come until a little bit later in the week, do you find yourself getting into a little bit of trouble, idle hands?
Sure, absolutely. And so I'm going to tell you one of the ways that I deal with that. So the first thing is I did buy silver. I posted a chart. We were pulling back right to the support level on a technical basis. Now, I was of the opinion that maybe it'll get a little bounce right there, tactical bounce. First of all, it's a very small trade. It's less than 1% of the portfolio. And, if I stop out, it's going to be an extremely small loss. So it's not something that I'm worried about. And it's not even a long-term position. But to your point, when it is a little slow and you're looking for trades and you kind of put a trade on, one thing to do is make it a very small trade. And that way, if it goes your way, hey, you made a little spending money. And if it goes against you, it didn't kill you. And that's kind of the way I manage portfolios. Like I have the big asset allocation is kind of set and I don't change it a lot. Maybe I'll hedge it here and there. Maybe I'll press the bet a little bit here and there. But for the most part, don't trade that much. But when I do trade, I tend to trade fairly small unless I just see a really amazing, almost can't lose idea where everything's lined up. Now, that wasn't the case on silver. I saw it as a potential bounce area and I took a shot, and right now it's a little below of where I put it on. So, we'll see. That'll probably hinge on CPI as well. If CPI comes in soft, I would expect, silver to rally pretty strongly. And if CPI comes in hot, then silver's going to go lower.
The old adage of buy the rumors, sell the news. So we'll see what kind of news we have later in the week. We did focus on that adage in our weekend episode where we talked about some of the news that came out, specifically the Fitch downgrade to the U.S. credit rating. Now, here we are, middle of the week after that, and it seems like it is old news and never even happened.
Yeah, I think in many ways it's a kind of a shocking headline, and it gets a bunch of views and perhaps some clickbait articles to go along with it. But I think kind of once you understand the system and the design of the system, it is a little bit inconsequential. Now, in the longer term, sure. I mean, we all know that in the long term, all of these governments are bankrupt, right? They're never going to pay off their debts. They're always going to spend more than they bring in. That's just the way it is. You kind of just need to accept it. So in the long term, yeah, it's a big deal. In the short term, it really doesn't mean a whole lot. Although it has contributed to a higher level of volatility, and that is kind of what started the equity sell-off. So we'll see whether there's any follow through on that starting tomorrow.
Well, look, before we wrap up for the week, I want to ask you a question on some of that, because last week seemed like, or felt like, what might have been the beginning of the return of volatility. Not only did it put pressure, causation is not correlation perhaps, but not only did it put pressure on the stock market, but bonds really got beat up hard last week. Now they recovered some of that with a big day on Friday, but here we are now. Things are pretty slow and sideways. Are you seeing volatility? If you believe it's kind of come back a little bit, do you think that favors, the risk off assets more?
Well, here's the thing: is as if what would cause, I think, risk assets to go down would be a hot CPI number, and if a hot CPI number comes in, then yields are going to jump, and if yields jump, then bonds are going to go down too. So we could get into a situation where you see the dollar rise, but just about everything else sell off, right? You could see bonds sell off, you could see equity sell off, you could see precious metals sell off. And that's why the CPI number is such a big number, because the Fed has made it very clear that that's one of their number one things that they're looking at. And so if it comes in soft and, it gives the people who think the rate cuts are done a little ammo, then, risk assets are probably off to the races. But if I think, as we've talked before, I think most people are kind of the opinion that the last rate hike is behind us. Perhaps there'll be one more, but that's it. And it won't be long before the Fed starts cutting. A hot CPI number is going to throw all that into the question if it comes in. So again, tomorrow's going to be a big day. The next 48 hours are going to be very interesting.
And one last thing I want to put on there, because you had an interesting tweet, or at least a comment that coincided with some of the things we talked about. So in the weekend episode, there was a part where I had accidentally faded out my audio bit, where I kind of queued you up talking about the bond market, and you had made some points about what the dollar does and what bonds do are two very different things. Someone had highlighted a chart on Twitter talking about where their view was that the situation wasn't looking great for bonds, tagging you, thinking that maybe perhaps it would be a jab at you, and you made very clear that your view on what the dollar does in terms of the dollar milkshake theory isn't necessarily correlated with bonds at all.
Yeah, and it's a little bit counterintuitive, is that you can get into this situation where if you have high inflation and yields are going higher as a result, then the dollar gets stronger because the world gets paid more to hang on to the dollar that they already need anyway. And so that just kind of turbocharges the dollar. And if anybody kind of disagrees with this idea, then just go back and look at 2022. As yields kept going higher and higher last year, the dollar just got stronger and stronger. And as soon as the idea that yields might not keep rising, and in fact, they might start falling, that's when the dollar started to fall. But then the opposite can also happen, is if you get some kind of a very big risk off event, some kind of a crisis, a credit crunch, in which case liquidity starts to dry up. Then in that case, you can get bonds and dollar rallying together because everybody's searching for the safe haven. They're searching for bonds as a safe haven because at least you get your money back, and the dollar rallies because it's the most liquid thing, and it's what kind of the whole system is based on. And then in the middle, who knows? Maybe one goes up and the other one goes down. But on the both ends of that spectrum, or on that barbell, you can you can have the dollar and bonds rally together, or you can see one rally and the other one fall.
Awesome. I just looked at a video that you did many, many moons ago as an early dollar milkshake video. And in that clip, you had specifically said that, the idea that, equities, you're saying that equities are rallying not because things are good, but that thing, because things are really, really dire. And I think it's another illustration of this point that you're making, and somewhat of a dichotomy. And speaking of that, I want to draw attention to something, because on the top of our YouTube channel, we have a Start Here section. There's one of your first PowerPoint presentations that you did with the dollar milkshake theory. So it's really that core of the theme of the story. But then it's followed by 3 clips that we've done on this show. And the other day, I decided to kind of review those. Like, are these really relevant still? And I have to say, man, I mean, it's you can kind of get caught up in the day to day and what's the new update and what's the news highlights. But those 3 clips that are associated with that Start Here playlist are so impactful. So I really encourage people to go listen to them, watch them. You talk about the Eurodollar in 2 of them. You use the prison cell analogy and the trading of sardines, which was brilliant. There's also the whole Santa Claus analogy, the musical chairs analogy. I mean, the way you're able to create these visualizations with words on what generally for a very, very long time were complex macro themes that people couldn't get their head around is definitely one of your gifts. And I think those gifts are showcased in those handful of videos.
Yeah, I've been kind of lucky that I've been able to kind of figure out some simple ways to try to explain some of these more, I guess, complex or arcane ideas, and that served me fairly well over time. But part of the reason that I've been able to do that is I think I've told you this before, John, is I've always worked with individuals. I've never managed money for institutions or endowments where it's professionals on the other side of the table, and so a lot of my clients are very smart and very educated and extremely successful, but they're not necessarily versed in financial lingo or financial models. And so coming up with ways to explain to them what I think is going to happen has been very helpful.
It's fantastic. Well, I appreciate everybody joining us for this midweek update. Let's see what kind of fireworks we get in the next 48 hours, as Brent mentioned. And we'll be sure to bring you all of that activity and our take on that at the full weekend episode, which runs a little bit longer than the one we just did here. So we look forward to seeing everybody soon. Have a great rest of your week. This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.